Good morning. Welcome to Stock Market Today for Friday, October 12th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com, Stock Charts TV. And if you want to follow me on Twitter, I'm at Dan Russo _CMT. And if you head over to StockTwits, I'm there as well under the same handle. So, another down day in the markets following the big sell-off on Wednesday. What's interesting to me is that the Russell 2000 was actually an outperformer yesterday. Second day in a row where the Russell 2000 was down less than the broader market, maybe a sign of stabilization in small caps. Remember, we said that we thought that move was stretched to the downside, that relative move. Treasuries were stronger with the curve notably flattening. The dollar was down on the major crosses. Gold, strongest daily gain since 2016, finishing up nearly 3%. Oil was weaker, falling by 3% after a larger than expected U.S. inventory build. Outperformers on the day: comm services, materials, tech, discretionary, and the Utes. Underperformers: energy, the FINs, the REITs, healthcare, consumer staples, and industrials. And as we get to the desk this morning, futures are pointing to a higher open, up about 1%. Asian equities were higher overnight. China, big outperformer. European markets are also attempting a bounce. Treasuries are weaker across the curve. Dollar a bit stronger versus the yen and euro. Gold down 30 bips. Oil rallying about 70 basis points. And as we look at the chart, changing it up a little bit here today, you can see we've lost the 200-day moving average intraday yesterday and just kept going. It looks like we're back above it here in the pre-market. I think the 200-day moving average is your tell here. If we can quickly get back above the 200-day moving average and stabilize and continue to move higher, it would give this 200-day moving average a chance to continue to work higher. The long-term trend would be up. The path of least resistance would be higher. However, if we merely rally back to the 200-day and chop around and have a hard time breaking through, that will give the 200-day moving average time to begin to roll over, signaling a change to the long-term trend. We're watching this closely over the next few days. You should too. What I do want to point out is that on an intraday basis, we actually tested the 62% retracement of the closing low to high move from March to September. So that's kind of interesting to me. Could be the first signs of a stabilization. RSI remains oversold. Chaikin money flow indicator remains bearish. Turning now to our market in a minute. If you sign up for the Power Feed email by heading to chaikinanalytics.com/today, you can follow along with this show. S&P 500 trades lower for a 6-day test, the key retracement level. We just looked at that. NASDAQ and Russell 2000 fall less than the broader market. I think that's interesting. I think we want to keep an eye on it. FAANGS testing the 200-day moving average. Crude oil, we said, fell by 3%. Futures do point to that higher open. And really here now, if you've been following along with this show for any length of time, you know that this is utter deterioration in the power bar ratios for the major indices, right? Not too long ago, the Dow had 12, 13 bullish stocks and 0 bearish. Now we're even at 4 to 4. S&P 500 now skewed 4 to 1 or close to 4 to 1 in favor of the bears. NASDAQ, 3 bullish or very bullish stocks, 23 bearish or very bearish stocks, and the small caps just continue to deteriorate. But here's that outperformance, right? S&P 500 down 2%, 2.11%. Small caps down less. Bonds big rally, sending yields lower. And according to the Chaikin Power Bar, small cap stocks and large cap stocks are bearish. Major indexes are mixed. As we move forward now, we'll also generate a stock idea for you. And this is an interesting one, and I'm highlighting it not so much because I think there's an actionable trade here and now, because there isn't, not on the long side anyway. ITG, Investment Technology Group, investment bank and brokers is the industry. Ticker symbol ITG has a very bullish Chaikin power gauge rating due to strong price volume activity, very positive expert activity, and attractive financial metrics. The stock does have weak earnings performance, however. Closed at 27.14 yesterday, down 1.74%. And the reason I'm highlighting it is because look at this spike yesterday on on potential takeover rumors. And then they had some good earnings. Stocks outperforming the market. It's overbought. Big money flow increase. But This is a weak industry group, but I think you need to do some digging because names like this, ITG, also look at a name like Virtu, VIRT. These are trading shops. And when volatility picks up in the market, they tend to do well. I would urge you to go back and look at a chart of Virtu, VIRT, back in the beginning of the year. When the market sold off and volatility picked up, that stock was a big winner. So if you can identify these stocks that are levered to trading that stand to do well in a volatile type market, if they have bullish power gauge ratings, they might be worth doing some work on the long side. Keep an eye on ITG. Look at Virtu. Nothing to do here with this stock in the here and now, but I just wanted to kind of point it out and identify that there are opportunities in the market. Increased volatility is going to help the companies that do well when trading volumes rise. Looking at our sector tracker movement over the last 5 days, and I mean, there's no way to slice this. It's ugly. Utilities, only group to be positive over the last 5 days. Staples and REITs round out the top three. Healthcare in there as well. That's your defensive posturing. I know it doesn't sound, like a consolation if you're long healthcare and it's down 5% over the past 5 days, but what's the market down 5%? Being overweight healthcare, which is what we've liked, has actually helped your portfolio. It's been down less than the overall market. Tech, which we've also liked, has been an underperformer, down nearly 8%. Materials, we've been keeping you out of that for a long time. Absolute disaster in that sector, continues to underperform. Look for the financials here. Obviously, earnings season gets underway today with reports out of JP Morgan, which already beat. We'll hear from Citi, we'll hear from PNC, we'll hear from Wells Fargo. Really what we're looking for throughout earnings season is, are expectations too high? Analysts are forecasting nearly 20% growth and another strong fourth quarter. Or has the market sell-off recently served to reset the bar? I don't know the answer to the question. Watch how stocks react to their earnings. Our industry in focus today, semiconductor services. And we've been bearish on semiconductors for a long time. And that's been the right call as this group has underperformed the S&P 500 by 4.7%. Power bar ratio, which measures future potential, is very weak. Group is currently ranked number 18 of 21 subsectors that we look at. It has moved up 2 slots over the past week, but everything else is really just breaking down. We watch semis as a leading indicator. They have not been pretty. 14 bearish or very bearish stocks. Count them. 0, or don't count them. 0 bearish or bullish or very bullish stocks. Some of the indicative names here, and unfortunately, they're all oversold. CEVA, Universal Display, ticker OLED, and Qualcomm, ticker symbol QCOM, all with very bearish power gauge ratings. But let's take a look at CEVA, because CEVA is an example of what we refer to as a classic Chaikin bear. Very bearish stock, weak trend, weak industry. Ribbon at the bottom of the screen, just a lot of red at the bottom of the screen. When you see that, that means classic bear. Bearish or very bearish stock that's persistently underperforming the market. Right? It's currently oversold based on our overbought, oversold indicator, and money flow is negative. We don't want to get involved here. What you want to do is watch CEVA. And if the semis continue to be weak, if the market continues to struggle, if CEVA can kind of stabilize here, work off that oversold condition, it opens an opportunity for you on the short side. Put ticker symbol CEVA on a bearish watch list today. Keep an eye on it. If you get rallies, it's an opportunity to sell. I mean, the entire way down. Rally, sell. Rally, sell off. I mean, just a textbook downtrend. This is the type of name we don't want to own, and we want to look for opportunities to open on the short side. Looking at yesterday's S&P 500 movers and shakers, gold and some of the metal stocks had a good day yesterday. That lent a bid to Newmont Mining up 7%. L Brands, bearish stock that's been under tremendous pressure, caught a little bit of a relief rally. Again, commodities, in particular the metals, helping Freeport. McMoran, DAL, Street must have liked what they heard from their earnings, up 3.5% in a massively down tape. Stock is still bearish. And Microchip, I mean, this has been a massive underperformer within that weak semiconductor space, getting a little bit of a relief rally, which is kind of interesting because it happened on such a down day. FLR reported earnings. Stock was down 17%. CVS, a very bullish stock down 7%. That wakes me up. I want to do some work on CVS and see if there's an opportunity on the long side there. Jeffries down 6.5%, neutral stock. Huntington Ingalls, HII, down 6% as industrials have come under pressure with the market sell-off. And then LNC down nearly 6%. These stocks are neutrally rated, so kind of hard to get excited one way or the other despite the moves. But it's when I see a name like CVS that's very bullish and it's down 7% on a day, I kind of want to take a look at it and see if there's potentially an opportunity on the long side. As we said, Delta reported they beat by 6 cents. Stock traded higher. Power gauge rating remains bearish, but keep an eye on a name like Walgreens. Actually, the stock was under pressure yesterday. They beat by 4 cents. WBA has a very bullish cheek in power gauge rating. And Commerce Bank shares, one of the regional banks, they come out, they're neutrally rated. They beat by 6 cents. Not much activity overall, though, on the earnings front until we get to this morning, where, as I said, all neutrally rated stocks, but I think these are going to be the key barometers for the market here in the short term. JP Morgan out this morning, beat expectations. Watch how that stock trades. We're going to hear from PNC. We're going to hear from Citigroup. We're going to hear from Wells Fargo. And as I said, analysts are forecasting 19%-ish earnings growth this quarter and another strong quarter in the fourth quarter. That presumably is baked into stocks, part of the reason we rallied to all-time highs. Now we've pulled back. Has that pullback reset expectations? And how are we going to calibrate our expectations for 2019? Because quite honestly, 2019 earnings estimates and expectations are really what's going to drive the market here. Watch how these stocks react. Listen to what they have to say. In particular on the banks, listen to what they have to say about loan growth as a barometer for continued economic strength, or are we seeing some weakness in the economy? So now, some of the key charts that I think are interesting that we want to keep an eye on. The NASDAQ stocks, the high growth stocks, really were the leaders to the downside. And here I've taken a look at the Qs. We have the Invesco QQQ Trust relative to the S&P 500, and you can see how it's been rolling over. I mean, this looks distributive, right? I mean, this looks like the start of underperformance. We have come down, though, to test the rising 200-day moving average. And I put some faith into the fact that the 200-day moving average is still rising. That's important for me. However, if we stay under it for a length of time and give it a chance to roll over, that does change the picture. What's also interesting to me here is that with the sell-offs, the RSI of the ratio has not become oversold, which is very interesting to me. I'm not saying that this is the dead bottom, right? Nobody knows where the dead bottom is. But what I want to say is keep an eye on the Qs relative to the overall market and keep an eye on the Qs on an absolute basis as they are testing support. If the Qs are able to stabilize and begin to outperform, that would be a sign of increased risk-taking in the marketplace. I think it would have bullish implications for the market. However, if we remain below the 200-day moving average, continue to roll over, break down on an absolute basis, then you have to look at your portfolio and begin to get more defensive. Same thing here. Here's the FAANGs. Will they hold support? I've built this custom index of Facebook, Amazon, Apple, Netflix, and Google. You've seen it before, right? Group has pulled back to the again, rising 200-day moving average. Actually saw a bit of a bounce yesterday. What we want to look for here is stabilization around the 200-day moving average, build a base, or even just kind of snap back and begin to move higher. The RSI of this index that I've built has become oversold. This concerned me. In my note to Chaikin Analytics and clients, I've mentioned numerous times, watch out for this negative divergence between price and momentum. But now that we've gotten oversold, the question is this a bounce? It's an opportunity. Odds favor a bounce. But is this oversold conditioning signaling a change of trend? We don't know. Watch the 200-day closely here on the FAANGs. I'll keep you updated on it as well if you don't have the ability to build the index. Finally, let's look at crude. It's fallen back into the range after a breakout through $74, trades as high as 76, and then falls back into the range. Be important to watch how crude reacts here around the 50-day moving average. RSI not oversold, still in bullish ranges, and money flow, while bearish, is actually improving. So let's look for crude. If it could stabilize around $70, may set the stage for the next leg higher. However, I think if we break the 50-day, we're going to pull back and test the bottom of the range and the 200-day moving average. So get daily stock ideas and more. Sign up for Power Feed at shakenanalytics.com/today. TGI Friday, everyone. Have a great weekend.